Wow, Tesla stock has gone up 30%. All my friends are making money. I don't own any Tesla stock. What if it goes up another 30% in the next 2 weeks? Going to the moon. I'm gonna go buy some Tesla stock. I wanna make some money. Hello everyone, I'm so excited to talk about today's video. I'm going to share the 3 strategies that I use to know when to buy a stock exactly. I'm also going to talk about how I position in and how I exactly time it. Now, one of the most critical aspects of being an investor is actually not just the mechanics of buying and selling. You can teach that, you can learn that skill, but something that's really hard to cultivate is your mindset. And if I can help you in any way, shape, or form to develop the right mindset, to develop the confidence, this is going to define you from being a really crappy investor to a very good investor. This is the dividing lines. I'm sharing this because I really want you to make your own financial decisions with confidence, with clarity, with conviction. So all I ask of you is, if you found this video helpful in any way, please smash that like button. Now let's level set here, okay? Before I jump into all my strategies of knowing exactly when to buy a stock, there are some things you absolutely must do as part of your due diligence, or what people call as DD. Okay, you must obviously research the company that you are interested in. It's like you understand the company in a very deep way because you know the product. Many times I get ideas from the things I own. I own a ton of Lululemon clothing, like a lot, like maybe way too much. And that's how I'm like, maybe I should become a Lululemon investor. And I stress these simple concepts over and over again. Buy a company that you know. Buy a company that grows. Buy a company that makes a lot of dough, and buy a company when the price is low. Did you like that riddle? So what that means is that you need to do research and check that their revenue is growing, their earnings is growing, their cash flow is growing, their profit margin is stable or growing, that they have way more cash than debt, because you don't want anyone who's like at risk of bankruptcy. And they have excellent management who is able to execute over and over and over again. And they have lots of catalysts ahead. Like, there's a lot of amazing products that they're producing, factories that they're producing, lots of optionality that is going to grow the company for years and years ahead. So when you curate these companies that you're willing to own because you've done your research, then you wait. You wait until it becomes undervalued, and then you pounce on it, because that's when you get the biggest return, is through patience. So personally, I use a stock app to watch these stocks that I love to own. And if you want to know what my stock portfolio makes up of, you could check this video up here. But what I do with this stock app is that I set an alert when it hits a certain buy price, and it tells me, ooh, maybe I should take a closer look. Or if you have Questrade as your brokerage account or bank brokerage, sometimes they have an alert system where you can set alerts like, if the price target is below this price, then it'll send you an email or text message, so that you don't always have to be like OCD watching your stock app. And then you start saving like mad. You live well under your means, and you have dry powder on the side. Now here's my 4 favorite strategies. It is very serious, you guys. So serious. I'm getting actually kind of sweaty. Whew, getting a little hot here. The first one is FUD news. Okay, it's really fake news. FUD stands for fear, uncertainty, doubt. I like to call it fake news. Tesla was an amazing example earlier last year. There's so much news about a braking issue with the cars from China, which actually turned out to be fake. There was also news about autopilot not operating properly, and it got into this car crash. Turns out it didn't have anything to do with autopilot. It was a driver's error. There's so much fake news that you gotta define what is real and what is fake. And when you know it's fake, those are the events you pounce on, because the stock will temporarily drop, and those are really great buying opportunities. Now the second strategy is earnings tumble. This is one of my favorite times to buy stocks, okay? For example, Apple recently had an earnings tumble. It had a temporary setback because its iPhones weren't selling as much. It didn't hit its quarterly target. But you know, iPhones, iPads, AirPods Pro, they're all selling like hotcakes. But do you think that one quarter miss where it didn't hit its target really reflects the long-term view of that company? Obviously not, okay? But these analysts, these Wall Street analysts, are really after quarterly targets. And this is your competitive edge. As a long-term investor with at least a 5-year horizon, you can see through this mess. You know it's a temporary setback. Companies are not going to execute every single quarter. And if they don't hit expectations, well, their stocks sometimes drop. And this is an awesome buying opportunity. Number 3, which is fear in the markets. For example, there might be some volatility, which means the stock market goes up and down a lot, like a big yo-yo, because there's fear about the election results, between Donald Trump and Biden, or there's a fear way back many years ago, it was Brexit, or there was fear with GameStop and AMC skyrocketing earlier last year, and then it just went dropping. It pulled the entire market. There's so much noise in the market. This is a time where you just get hyper focused on the companies that you know will grow, make a lot of dough, and you buy it low. Those are the awesome buying opportunities. Just ignore the noise in the market and focus on the company's fundamentals. Now, the 4th strategy is dumb CEO mistakes. This is absolutely, I love it, okay? For example, Chip Wilson, back in the day, who was the CEO of Lululemon, made this news headline saying these Lululemon pants don't look good on certain women. Okay, that day caused the Lululemon stock to crash. Do you think that really impacts Lululemon in the long term? Do you think that Lululemon is not going to sell their yoga pants for a lot of people? Really, it doesn't affect the company's fundamentals. It's just a temporary setback caused by a CEO who's a little bit eccentric. Or Elon Musk gets a little bit bored late at night, does a little bit of this, gets a little crazy, Twitter happy, and then says, hey, my stock is a little too high. And then the stock drops. But turns out he meant the stock is too high. In his humble opinion, he meant as a stock split. So those are the amazing opportunities to pounce. So how do you position in? So after doing a lot of research, you got to figure out what is the downside versus the upside. And as a rule of thumb for myself, I look for a 2-to-1 ratio. That means if I'm risking $20,000 of capital, I'm actually expecting $40,000 of upside, which is a 2-to-1 ratio. So for example, like a Palantir, pretty early stage growth stock, I'm definitely expecting at least 20% year after year returns because it's an early stage. So I expect the stock to at least 2x in the next 3 to 5 years versus a speculative stock that's in actually much earlier stages than Palantir, because Palantir has been around for at least a decade. I think more than a decade. Don't quote me on that. If it's a speculative stock, like it's just starting out, well, I definitely want a risk versus reward ratio at least 3-to-1, if not a lot higher. Basically, I'm looking for asymmetric risk versus reward ratio. Now, my go-to strategy is positioning my money in thirds. So for example, if I have $15,000 to put into a company, I'm not going to just deploy the whole 15K and dump it into one company. I'm going to split my 15K in thirds. So I'll have 5K, 5K, and 5K. So the first 5K, I'll put it into a stock. The next 5K, if the stock drops, then I'll put in the next 5K. And the last 5K, well, I'm going to watch how it performs. If the quarterly earnings are meeting my expectations, like meeting my profit margins, meeting my revenue growth because I've done my due diligence, then I'll put the last third. Or if the company drops again, the performance is like looking pretty good, it's on track, then I'll deploy the last third. Now, the biggest downside to this approach is that, well, the stock may not actually drop again, okay? So you may lose months waiting to build your position like I did with my Square, with my Palantir, because I actually haven't built up my full position. And that's the risk you have to accept if you position your money into thirds, is that you might take a little bit longer to build your position, or it just may never drop to the price that you really want to deploy your last third, okay? For example, Tesla has done a huge run since last year. The first time I bought it, I've never been able to buy it below the price that I got in the first time. So I've had to actually position up, but that's okay, because compared to my research and my valuation, my price target in the future, well, there's a lot more upside versus downside for Tesla. So that's why I'm okay to average up into the company. Now let's talk about technical analysis, because this is the last thing I do when I time when to exactly get into a stock. So you've done your due diligence, you know your risk versus reward, you know your price targets, you know how to position in because you got your money set aside. Then this is a time where you look at the charts and say, ooh, when's a good time to exactly get in? So here's my rules of thumb. First, I do not ever buy when the stock does a parabolic move, because the higher it flies, the bigger it falls. So again, when the higher it flies, the bigger the fall. The other rule of thumb is that I don't like buying when the stock keeps tumbling day after day after day. I wait until the stock actually consolidates, gets a little bit choppy. Then I know that in the short term, this is the market saying, hey, it doesn't know where it's going. And that's when I could see that there's a tight range in the company, tight range in prices. And I wait until it consolidates. So if you look at a stock like Amazon or Google, you'll know that its revenue has been growing every single year. Its earnings has been growing. Its cash flow has been growing. Its profit margins is looking solid. But so many times those stocks actually consolidate in a tight range. And if you're looking to build a position in Google or a stock like Apple or even Tesla, you look for that consolidation as long as it hits, of course, your price targets. But this is the time, this is my most favorite time, is to buy it when the price starts consolidating. And the tighter the range, the better, because then it tells me it's really hitting a huge support. Now, as a bonus, I want to talk about timing. Timing when exactly are the best days or the best times to buy into a stock. Okay, I'll share two strategies. Okay, typically a pattern unfolds not every single year, but sometimes it does. Fall is fall. Okay, this is when the big institutions, the big fund managers, they need to lock in their performance bonuses before, well, Christmas. Okay, they want to lock in their profits. So they'll sell their winners and then they rotate into a different sector. So maybe tech to energy or tech into financials. But what it means is that some of your stocks may actually go on sale because these big institutions are selling, and that's a great time to buy because fall is fall. It has nothing to do with the company. It just means they want to lock in profits and they could be a big sell-off, and that's when you could possibly get in. Now, the other opportunity is sell in May and go away. Now, this pattern doesn't always happen, but hear me out. Typically, during the summer, we all like to go on vacation. Well, that happens to be all the institutions, all the big fund managers. So what they do is they sell in May and go away. So sometimes you'll see some of your favorite stocks go on sale. I think Tesla at that time was going on sale. There was also a bunch of other stocks at that time that was going on sale. So this is a time that you might want to take a little bit closer in your stock app just to see that pattern. Hey everyone, I hope you found this video so helpful. It would mean the world to me if you give me a thumbs up. And if you haven't subscribed, why not? I'm a Canadian YouTuber that loves talking about stocks, real estate investing to create multiple streams of income, to grow your wealth and ultimately design your ideal life. Anyways, I hope to see you in the next video.